Welcome to Chainmind, where we explore the biggest stories in crypto that are not just updates, but signals for what could happen next in this dynamic market. In this episode, we'll take a deep dive into Bitcoin's record-breaking momentum, Ethereum's steady climb, and XRP's remarkable resurgence. Along the way, we'll uncover institutional moves shaping the future of crypto, groundbreaking developments from nations and corporations, and even the impact of political shifts on the market. Let's dive straight into it. Bitcoin kicked off the week on fire, breaking its previous all-time high and touching an astonishing $93,265. After this monumental move, it has been consolidating between $86,000 and $91,000. This range-bound action shows that the bulls are still in control, but the possibility of a sharp correction looms as the market shakes out over-leveraged positions. Veteran traders will remember that such corrections have historically set the stage for more significant runs. With Bitcoin continuing to dominate market sentiment, it's clear the bull run is active. Ethereum, on the other hand, had a week of its own. After a strong rebound to $3,400 from last week's pullback, Ethereum has been unable to keep pace with Bitcoin's explosive momentum. The lack of a breakout signals that the altcoin rally hasn't yet fully materialized. Bitcoin's dominance suggests that once it cools, Ethereum and other major altcoins could see massive gains. For now, Ethereum holders remain on edge, eagerly awaiting a push to new all-time highs. Adding to the excitement, XRP delivered a jaw-dropping performance, skyrocketing over 100% in just 1 week. This surge followed speculation about SEC Chair Gary Gensler potentially stepping down. The XRP community has long viewed regulatory clarity as a critical catalyst for growth, and this week's rally is a testament to the power of sentiment. Whether or not the rumor holds true, XRP's comeback demonstrates how quickly the market can respond to news. While these price movements captured attention, institutional players were quietly making moves that could reshape the market. MicroStrategy, already the largest corporate Bitcoin holder, saw its portfolio soar past $20 billion, yielding an ROI of over 100%. The company's ambitious 21-21 plan, aiming to raise $42 billion to acquire even more Bitcoin, underscores its unrelenting belief in the asset. Bhutan, another major player, has quietly amassed over $1 billion worth of Bitcoin, accounting for a staggering 32% of its GDP. With Bitcoin now being treated as a strategic reserve by both corporations and nations, retail investors are taking note. Political events also added fuel to the market's fire. Following Donald Trump's election victory, Bitcoin surged by 35%. This ripple effect wasn't limited to Bitcoin alone. Dogecoin, the original meme coin, saw an unprecedented 147% spike over 7 days, briefly trading at 41 cents. Dogecoin's move highlights how political outcomes can create a domino effect, igniting broader market enthusiasm. The excitement wasn't just in meme coins. Tesla's Bitcoin holdings surpassed $1 billion in value, a milestone that further solidifies the role of Bitcoin on corporate balance sheets. Tesla's commitment to Bitcoin reflects growing mainstream adoption, even as traditional finance struggles to catch up. Meanwhile, developments in altcoins continued to make waves. Robinhood Crypto expanded its offerings, adding Solana, Pepe, Cardano, and XRP for US customers. This move demonstrates the growing demand for diverse assets, especially as retail investors look beyond Bitcoin and Ethereum. Similarly, Canary Capital's filing for a spot ETF for HBAR drove immediate price action, indicating strong market interest in regulated investment vehicles. El Salvador's Bitcoin strategy also paid off handsomely this week, with profits surpassing $525 million. Bitcoin's record-breaking rise to $89,000 has validated the country's decision to make it legal tender, proving that bold, forward-thinking policies can yield significant rewards. On a global scale, Bitcoin achieved another milestone, surpassing Saudi Aramco to become the world's 7th largest asset with a $1.81 trillion market cap. With only tech giants like Apple and Microsoft ahead, Bitcoin's rise underscores its growing role as a cornerstone of global finance. Institutional interest also continued to surge as Bitcoin spot ETFs recorded $510 million in net inflows on November 13th alone. BlackRock's ETF led the pack with a cumulative inflow of $29.152 billion, while Fidelity's ETF followed closely. These inflows highlight the growing appetite for Bitcoin among institutional investors, which could fuel further price increases. While the crypto market thrives, macroeconomic factors remain a critical backdrop. US inflation ticked up to 2.6% this week, raising concerns about traditional financial stability. Bitcoin's resilience amid such developments reinforces its narrative as a hedge against inflation, a key consideration for investors seeking long-term security. Amidst all this, Genius Group announced a bold Bitcoin treasury reserve strategy, allocating 90% or more of its current and future reserves to Bitcoin. This aligns with the broader trend of institutions betting on Bitcoin as a reliable store of value. And finally, BlackRock's Bitcoin ETF made headlines again, purchasing $3 billion worth of Bitcoin in just 5 days. Such aggressive accumulation by one of the largest asset managers in the world signals a profound shift in how traditional finance views cryptocurrencies. For retail investors, it's a clear indicator that Bitcoin is moving from the fringe to the mainstream. As the crypto market continues its historic run, the stories we've covered today highlight the growing integration of digital